Today, with the Monday rate update, we are going to start with some good news. July is over. That's right. That is the best news I have for you as we start this week, the first full week of August. And last week was a pretty tough one. We had the Fed Open Market Committee meeting, and the Fed didn't raise rates, but they weren't very nice either. And then we also had a bunch of attacks going back and forth across the Middle East. But you know what? As we start the week, we are in a kind of ceasefire with the Iranians. Sometimes I get so confused. Whatever it is, they are in a ceasefire. The Houthis are in a ceasefire, so that's pretty good news. They've asked the U.S. to stop bombing them, and that's how we start the week. And you know what? This week, it's Jobs Week. That's right, Jobs Week. So we're going to be taking a look at what reports are coming out. But first, let's talk about interest rates and where we are as we start the week.
Okay, before we move on, I gotta say this. 91% of people watching this video now aren't subscribed to the channel. And look, if you're a Hawaii buyer, a veteran using your VA loan, or you're just trying to time the market right, this is exactly the kind of update you don't want to miss. So hit subscribe now, turn on notifications if you can, and let's get to the next report.
Let's start with the numbers. All right, we're looking at 30-year fixed rates at around, and please understand that these numbers aren't necessarily the rates for the broker. These are the average rates across the country. We pulled it off of Zillow this week. Sometimes I'll use Mortgage Rate Daily. Really, it's a pretty good indication of where we're at rates-wise. 30-year fixed is at 6.65%, which is down about 10 basis points. What is basis points? That's 0.1%. From last week. VA, we're right around 6.3%. Those rates are a little higher than they were as we started last week or ended last week. VA 5-1 ARM rates, they're a little higher right now, but they're a lot more volatile. And for instance, for us, my VA 5-1 ARM rates have actually been about a quarter of a point to half a point lower than what we're at with the 30-year fixed rate VA rates. 30-year refis, man, not a lot of those going on. 6.88. We need some downward movement certainly across the refi world, and I know there's a lot of people with higher rates. Just gotta, I don't say suck it up, but you just gotta tighten that belt a little longer. But I do believe that rates will come down, of course, over time. You know, really the big deal right now, it's all about the oil. It's all about the Earl. And last week we also had the PCE report, the personal consumption expenditure report. It actually showed that inflation was down a little bit, or at least steady. But that didn't show July numbers. That showed June numbers. We hit over $100 in July, and now we're kind of, as we start the week, we're a little lower. We're about $88 a barrel post 27 July. So that's good news because we had popped over $100. Now, will tensions stay where they're at? Will they kind of smart heads prevail and we'll get back to the negotiating table? Man, I don't know. This pause is fragile. We've seen it time and time again since the war in Iran started. Talk is cheap, and pretty soon somebody's gonna start firing somebody. Typically, it's Iran first. And then all hell breaks loose. But right now, as we start the week, oil prices are back under $90 a barrel, and that's a good thing. All right, kind of recap what happened last week on the 29th. The Fed, they held tight at between 3.5 and 3.75 for the Fed funds rate, but man, they were really hawkish in what they were saying. When you have three of 12 members vote for a rate, vote opposite of the group, that's dissent. That's a lot. Most of the time, you might have one person who dissents, but to have three, that just shows that some of the Fed heads are saying we need to raise the Fed funds rate. I agree overall, though, that they shouldn't, and they didn't. And guess what? We got 2 more months. Maybe not 2 months. A month and a half before they actually make that next decision. So the next decision will be in September. But, again, will they stay quiet every time they talk? All right, it really hurts mortgage rates. It really does. We need them to shut up, go to Jackson Hole, stay locked up, and stop talking about where rates should be. Because you know what? whenever they talk, they move the market, and we don't need that. The market's very volatile. The market's very fragile. All right, the interest rates are very fragile. They react to everything. All right, it's just like it's like telling your wife to calm down, your girlfriend to calm down. It doesn't help the situation. All right, just shut up and let it ride. Just let the economy speak for itself. I get in trouble with my wife, but hey, you know what? Let's go with it. So what's going on this week? This week, it's jobs week, people. All right, all week long, we're going to be talking about jobs. Not really on Monday, not a lot on Monday. Tuesday, we'll get the JOLTS report, the job opening labor turnover survey. Wednesday starts that usual, the ADP monthly employment report. That is the private sector report, which has been, to me and to many others, has been rock solid over the course of the last several years. As a BLS, a Bureau of Labor Statistics jobs report, hasn't always been kind of accurate. But on Friday, we get that jobs report, the BLS jobs report, non-farm payrolls and unemployment rate. So really, we'll see where we're at there. Expectation really is that unemployment it's not going to change that much, but it could, because obviously this is for the last month. With the higher prices, maybe wage growth slowed, maybe people started laying off more people, but it didn't look like that from the weekly unemployment and continuing claims report. So that's what we got on deck this week. But really, we start the week really with some good news. All right, rates. With the ceasefire, the temporary ceasefire, that's a good thing. That's a good way to start the week. But we're talking. It's like walking on ice. All right, it's that first ice of the year. You got to tread carefully, and that's how we're treading the market this week. Tread carefully. Jobs week, no surprises, and we might see interest rates come down just a little bit. All right, have a great week.